My name is Varun Karnanandam, CEO, Principal Broker with Fidus Mortgages, and I'm here with Reaza. Reaza, why don't you introduce yourself?
Thanks,
Please.
Varun. It's really good to be here and I appreciate the time. My name is Reaza Ali. I'm a National Broker Relations Manager with Neighbourhood Holdings now.
Perfect. Reaza, our relationship goes almost 10 years now.
Yeah, that's true. It's almost 10 years.
It's more than a business relationship. It's a personal relationship, and we have become friends. And you were the sounding board 10 years back, leaving the bank and becoming a broker. Did I make the right decision? You remember those conversations?
I remember meeting at the Starbucks.
Starbucks, not in an
Yes.
office, yeah.
No, not in the office. And
Because we didn't have an office.
No, and you know it was so nice to get together. But I do recall the first couple months.
Yeah.
You remember what
And
happened?
figuring it out, yeah. And Bill B20 just rolled out right after open up a brokerage.
I always tell this story. I never use your name, but I always tell this story about someone that came out from the bank, B20 rolled out some, and I was at a conference, I came back home and all of a sudden I get a call from you in the evening. So,
I remember the call.
Riza, did we make the right choice?
Yeah.
Should I go back to the bank?
But you also worked at the bank, so we have
Yes.
history. Yeah.
Yes, exactly. And I remember telling you, no, don't do it.
And Reza, you come with a lot of experience. You've been a broker. You've been working at HOC. You worked at Home Trust.
Yes, I started at Household Finance, but I did work at Home Trust for 3.5
That's where
years
our
as well.
relationship began.
And that's where we met.
Yeah, that's where we met, right?
Yeah.
So even lending has been changed
Oh,
drastically over the last 10 years. So how Home Trust used to underwrite the deal 10 years back, that's what the private space is looking at right now.
Yeah, it's definitely evolved. And when you talk about Home Trust or just the alt lenders in general and all of the regulatory changes with B20, even impacting the banks on the off-C side,
Yeah.
it rolled a lot of clients from the bank side into the alternative institutional lenders space. And then most recently with the changes, I would say about 5-6 years ago now, there was another shift of those high quality clients moving from the alt lender space into our space.
Private space.
Yes, into the what we call the mortgage investment entities, right? Which are made up of mixed and mutual trust companies.
So this audience could be referral sources, realtors, and regular clients. So why don't we start with introducing what is Neighbourhood?
Absolutely.
And how the transition from FisGuard into Neighbourhood. So there's like, when I say Reaza, everyone says, oh, Reaza from FisGuard. So let's kind of get that big elephant out. So why don't you talk about the transition and what is Neighbourhood and talk about the assets and the administration?
100%. Yeah. And I can go rewind back to last summer and then leading up to October. So there was a major shift in our industry when FisGuard, who'd been in business, we'd been in business 31 years.
One of the most reputable lenders out there.
Yeah, the reputation was beyond anything out there, and that was one of the.
It's a family-run business
for me. Family-run business. Neighbourhood Holdings celebrated 10 years this December, and the story goes from the CEO when they first started on their whiteboard, they had FisGuard up there as a company that they admired and wanted to emulate. They've done a great job over 10 years of growing their business. And this past October, it went from admiring and in competition to a degree as well to now acquiring FisGuard. So Neighbourhood has now taken over FisGuard. On the front end, it's all Neighbourhood Holdings.
Yeah.
FisGuard exists on the back end with the capital side. So we have the two funds running in behind the scenes to be able to facilitate all the transactions, which is a great thing for our industry and the brokers, because there's so many more options available under Neighbourhood. So to talk about Neighbourhood, as I mentioned, 10 years in business, residential lending right now only, first and second mortgages. But with the coming together of both companies, the best of both worlds. So expanded lending areas, expanded LTV, the price points are fantastic. The service levels are are much better. So we have a lot to offer to the broker community and their centers of influence as well, and their clients. When you talk about our capacity, and this is a really good point as well. When a broker like yourself sends us a file, we have full control on the money.
Yeah.
And we determine based on our lending criteria, if it's something we're interested in, we allocate those funds. And until you tell us it's going to close or no, the client decided elsewhere or another option, and then we move on from there. But right now, this company went and we've essentially doubled the company, both in scope of staffing. We're fairly equal in the staffing levels, but also in capital. We're roughly 800 million
800 million.
in capital. The goal is to get to that billion and then beyond as we progress through this year.
Let me kind of answer this. It's important for the audience to understand why the capital is matter.
Absolutely. So in our space, it's a big space now with the amount of lenders that have entered this space over the last, I would say, 6 years.
Yeah.
In around there. And you can have a lender as small as 1.5 million in capital up to $1 billion plus. And the challenges when you have a smaller capital base is if you're not managing that capital very well and keeping an eye on the flow of the business going out and coming back in, you could run into situations where you actually run out of capital. And that puts you in a very bad position, especially as a source that is dealing with a lender. You submit a file, they say it's approved, and then all of a sudden they don't have the money for that file. Your client and yourself could be stuck last minute.
Yeah.
And now you have to scramble and find another option. So it is very important to understand the companies that you're dealing with on this side, the access to capital, the fact that we're tracking it and constantly staying on top of the flow of that capital to ensure we have that money available to fund the files.
Yeah, and does also help with the rates as well, right?
It does help with rates in the sense of the access to capital.
Okay.
So
when you have more capital, you access more.
Potentially more, but it's the source of capital. So you have a combination. It could be what we call retail. So us as individuals giving our money to a lender to say, we want you to manage that. They pay us a dividend as an investor. And then you have institutional capital, which depending on the structure of the organization, the lender, it could actually afford you a lower cost of that capital, which
that's in form of a line of credit from the institutions, right?
Could be a line of credit, could be large institutional investor funds as well, and determined by what their risk appetite is and what their demand is on returns. It can then give the lender the ability to offer better rate points.
Absolutely.
As well.
So what I understand is more capital runs into less cost of borrowing for the clients,
depending on the source of that capital.
Yeah, and also that leads into more stability.
Definitely much more stability.
Yeah, stability is important as a lender, right?
Very important, because if you're a lender that is not tracking your capital properly, and all of a sudden you run out of capital, you know, and you're going out to your broker community and their clients say, "Send us your business. We want your business." All of a sudden you can't manage that business.
Yeah.
And now you're not necessarily a lender, you're a service provider, because you're servicing the files that are on the books right now. And the important piece to this is when a lender is looking at a file, what's the exit strategy, whether it's a year or 2 years or less than a year down the road, because that helps manage the flow of that capital. You understand, 6 months down the road, I'm going to get X number of dollars, could be millions of dollars back into the lender to be able to then turn around and lend that money back out. So tracking is very, very important.
Absolutely. So this also leads into another thing as well. As a broker, as a mortgage agent broker, it's very important who you deal with.
It is.
And there's a lot of horror stories about the private lending. The minute you say a word private lending, everyone gets very cautious. It's a scary word.
Mm-hmm.
So can you kind of tell how a neighborhood is different?
Absolutely.
And there's a stigma about the private lenders because there's a lot of private lenders, as you said. There's an individual private. John Smith can be anyone can be a private lender, right? And how the reputation of neighborhood and your values are different from a regular private lenders and how you guys are different, and how that give a confidence to the clients and the central influences.
So you bring up a number of good points. When you look at private lending, or as we are referring to it now as alternative lending, not specifically private, because there are segments that are broken out. You have your individual that can be a private lender. And for the most part, there's not a whole lot of regulation around that. They can decide what file they want to cut a check for, and the terms that they want to charge, and not just on the front end, but on the back end when someone wants to leave or pay out or renew, and then throughout things like NSF charges. It's a wild scope when you think about things. So you have your private individuals, and then what I like to call institutional, if you will, private, but that's when you're getting into the scope of alternative type of lending.
Okay.
So it's much more structured. There's regulation around it. We're actually regulated on the security side of the business, whereas you're regulated by FSRA in Ontario, and then the other regulators throughout the other provinces. So it's a different type of regulation, but we are regulated. And that's one thing I think people don't understand is we do have to follow things like AML and FinTrack now. We have to be very cautious about the type of files that we're willing to lend our investor funds on, because when you look at things on this level as an institutional lender on the private side, we have to be responsible for two things. We have our responsibility to our investors and how we can earn a profit and a return in order to pay the investor a reasonable return to keep their money in our lender. So that's number one. Now, I would also say the other number one is, if we have all of this money sitting around and it's just sitting around, it's not earning anything. It's costing us money as
because you have to pay the investors.
Correct. So that never stops. We have to continue paying our investors in order to keep them. So the other responsibility is to ensure that that capital is deployed in a responsible way
For the good borrowers.
Absolutely. You know, I've always heard, and I've been in this business over almost 3 decades now, and I've always heard this saying, not everyone deserves a mortgage.
Yeah. Which is true.
You know, because not everyone qualifies. Now,
that's where the problem is right now.
Correct. Because there are so many sources out there now, and everyone has capital to deploy. So everyone has a different risk appetite when you look at the lenders. Now, does that make it right? When you look at all of the different scenarios, and I'm sure you've come across clients, you look at their situation, there could be a lender out there that can facilitate that, but you look at the situation and say to this client,
is the right thing.
This is not the right thing for you. It's going to either cost you more money, or it's going to cost you your home because you can't afford it.
Because in the way you will be losing it.
That's right. So these are the things as a mortgage broker, keeping in mind for your consumer, for your referral partners that want you to do the business, right? You have certain responsibilities and duties on that level as well.
And as a mortgage broker, is also very important where you place your clients as well, because
it's reputation.
Exactly, it is a reputation at the end of the day, right? You can find, as you said, you can find a lender to lend on the client, but I'd rather have a client go through the proper lender and go through the process of adjudication to see if this client can qualify the private mortgage.
Correct.
At the end of the day, you are not in a business of taking the properties over. You are in a lending business. You are a service provider.
We are not in the business of taking property.
So that's mean you're going to make sure you do a proper adjudication to make sure this client can afford that.
The challenge, and I think a lot of people may misunderstand this, is taking property is not a cheap proposition. There's a lot of cost around that when you go through the power of sale process or foreclosure process, and that's on the lender. Also, the timing.
Yeah.
Over the last number of years, with the way the market has been,
Something moving.
I'll tell you, some of the other MIC operators that I speak to consistently, they've had files where it's taken them over a year, and in some cases 2 years,
Not selling.
that they have not been able to move.
Yeah.
And it's their responsibility to maintain that property. So there's cost.
It's costing them money.
It's costing them money.
Yeah.
Yes. So for you, as a mortgage broker, and any of the mortgage brokers out there, the knowing your client, of course, in your due diligence is very important. On this side of the business, I say, it's just as important to know the lender.
Yeah, absolutely.
Reputation is absolutely a real thing, but also knowing how the lender operates from all the cost points and everything else is critical.
Absolutely. Reza, you brought an interesting point. Like, it's not about everyone's stigma is, I don't have any options. I go to private lending. You have a bad credit, or you don't have any income. That's not the case anymore.
No, this is becoming more of a mainstream option.
Mainstream option, right?
It really is.
So can you talk a little bit about what's your typical clients look like?
Absolutely. Most of our clients really fall into that self-employed type of bucket. Now, when I say this, I also want to throw in a couple other things, and this is just the way the economies have changed and shifted. I talk about multiple sources of income. So you could have someone that's very well employed, but in order to live and have a lifestyle and support their family, they need to take something else on.
Yeah.
And all of a sudden now you're getting into multiple sources of employment potentially, and then other income could be rental income, could be government support, could be pension. So these are situations. It's not just about someone that can't pay anymore. It's about
Qualifying.
It's about the affordability picture now.
Yeah.
And does it make sense? From our perspective, we take on the approach of what we call a stated income, and it has to be reasonable for what the client does and the industry as a whole. But when we look at that, there's a heavy reliance on how does that client's credit performance look like, and is it up to par? Does it give us a comfort level at the LTV that we're willing to lend? As well, and is the property a good property in a good location? In the event the worst case scenario happens and we have to take that property, can we recoup 100% of our investor funds? Those are some of the things that us as a lender, we have to be concerned about. But from a client profile, honestly, it goes from clients with a minimum 500 credit score all the way up to 800 plus. We see the entire scope when it comes to the quality of the client.
Yeah. And also the income as well. As you said, some of them have income that's not conformable.
Cash.
Cash.
They could have income from overseas.
Overseas, we see a lot of those things.
There's a lot of that.
Yeah, it's not a bad business. It's not, they're doing something.
They're not hiding it.
They're not hiding anything, but that's not really on the different way of reporting it. Is not a threshold for the banks to look at.
Yeah. So I like to draw out a picture, and this could be a real scenario for a client that you may come across where they're self-employed. They have foreign income. It could be a foreign pension or a business they're operating overseas. They have rental income. They have contributory income. So people that are living in the household, not on an idle, but they're working and they contribute to the household.
Yeah.
They could have government assistance in the form of child tax credits as well. We want to know about all of that support as well.
Yeah.
We consider all of those sources as income because it gives us ideally a comfort level as a lender that this individual or these individuals can repay the mortgage ultimately you can find a much better financing situation for them down the road, and then they really at that point exit.
What is the average time period a borrower is with you guys or with the maker? What is the
So remember, we used to say on this side of the business, it's short-term lending, right?
Yeah.
We're here to help fix a situation. You're going to help that client repair whatever their situation is, and then move them on to better financing situation. In the past, I would say it would be 9 months to 1 year.
Yeah.
In this environment that we're in right now, you have the employment situation, the affordability piece, plus the where the values are. It's a perfect storm unfortunately for some. I would say short-term lending, I would redefine that now to
long term?
maybe 18 months to 2 years.
2 years.
It's
doubled
in some cases.
The time frame has doubled.
It takes time to repair credit. That's the most basic one, right? It may take time. Someone has just started a business or new to Canada
To establish themselves.
to establish. So they need 2 years in most cases with these institutional lenders. And it takes time just to draw out a plan and for that consumer to execute. I'm sure not all the consumers you speak with, you sit down and say, hey, this is the plan. They don't don't all follow
The plan of the paper.
they don't all follow it, right? So that's a challenge on your part,
Yeah.
is to manage that consumer to repair whatever their situation is.
So that's also leads it to, so when we sit down, it's a plan, it's a 1 year.
Mm-hmm.
And we are seeing 1 year comes, nothing happens.
1 year goes very quick.
Very quick.
Very
Very quick. That's also leads to the product you guys offer. You guys don't charge a renewal fee.
So on the Fiskart side, that was the case. On the neighborhood side, it's very close. We actually we charge a simple $295 renewal fee.
I would say that's
Which is
nothing.
Pretty much.
I would say that's so free.
In the scope, I'll give you an example.
Yeah. Your competition.
Yeah. In our space, a renewal fee, it's very wide scope. So let's say from us at $295 flat fee, the highest I've cataloged over 8 years is $68,000 renewal.
What's the
fee.
percentage?
Oh, that I can't even remember that.
I usually see anywhere some lenders charge 1 to 2%.
But this is the thing. Yes. So you'll see many different forms. A lender in their documentation say, at renewal, we're going to charge you this percentage of the balance of the mortgage. Others will say, here's the dollar amount.
Yeah.
So they present very differently. And that's kind of leads into something I developed probably about 5-6 years ago now, is actually a list of questions that I provide my broker partners that they should be asking of the lender reps when they have a client that fits these type of profiles. The renewal is absolutely one question there, because first of all, not every lender actually offers a renewal.
That's our thing too.
So they
don't even renew it.
Right. That's a very important piece, because let's say, for instance, you put a client in a 6-month term or a 3-month term, and they feel that they're going to go, that goes by so fast. And then all of a sudden, if that lender is not willing to renew, you now have to find another lender.
You may not even find a lender.
You potentially may not find, but if you do, your client has to go through the whole process of the
legal fees,
everything. So when it comes to sitting down with your consumer and looking at all the different options, knowing your lenders and what they can provide you, you can then draw out a realistic plan.
Yeah.
So whether it's a 1 year fully open term that we offer, it gives you all the flexibility that you feel this client, we can exit them within the year. There's no cost to exit. That's the cheapest exit they'll find. Or maybe they need 2 years. That's okay. We have a 2-year term that offers a 3-month interest penalty if you manage to find something before the 2 years is up. It's very reasonable.
And that's one of the reasons we work with you folks a lot is plan change. I can't go and tell a client to pay 2% of the loan amount again to renew the loan versus paying a $295 is a significant difference.
It's a major difference. And again, we know the regulators' main focus, and it has been for a number of years, but it really is ramping up this year, is on suitability. And when you sit down with the consumer and you talk to them about all the different forms of lending, most clients come to you, I'm sure, and feel, I can go to the bank.
Yeah.
Or you can get me qualified at the bank. And then when you sit down with them and realize maybe it's their credit score, maybe it's the affordability piece, and they're not qualifying on the ratios, and you have to talk about the other alternative options to finance, you have the opportunity to lay everything out for them and say, these are the options. And by the way, this is how we can get you to where you want to be.
Yeah.
But understanding that, and then having a lender that can be flexible
It's important.
is very important especially in these times. We know where values are. It's making things very difficult right now. And most general consumers aren't aware of that. You're the expert.
Yeah, absolutely. As I said, Reaza, thank you for being a great partner and a great friend. And your products are amazing for clients who have, we don't force the client, or we don't push the clients to the private lending, but sometimes that's the only option.
Exactly.
When it's come to an option, that is the only option, it's very important as a broker to work with a reputable lender.
Well, I always say, as a mortgage broker, when you place your consumer wherever, if something goes wrong and the consumer, maybe they weren't told about something, a renewal fee, a high renewal fee, or whatever it may be, initially the consumer is going to be upset at the lender, but ultimately they come back to the person that placed them.
100%.
And it impacts the reputation of that individual.
Absolutely.
With their consumer, and not just the consumer, but also the center of influence.
Yeah.
They're the referral source that you may be dealing with.
It can hurt your business.
And ultimately it can. Yeah. So that's the importance behind understanding who you're dealing with, making sure all that flexibility is there, and when we have a good partnership and friendship there.
For sure. Anything before we wrap it up, Reaza, you want to highlight any specific things about Neighbourhood Holdings?
I would say, now that the acquisition has happened and the dust has settled a little bit more, from my perspective, the important pieces were, again, very competitive price points, very fast service. We can handle things within a number of days if needed, to be able to help you and your consumer. And we have a lot of experience on hand. So when it comes to structuring some complicated files, that's not an issue for us. So we're able to manage all of that for our good broker partners like yourself. And this is the other thing, is we're looking to work with people that understand how we work as
Your
well,
values.
and our values behind that, because we ultimately are looking after the best interests of not just the consumer, but we want to look after the best interests of the broker and their reputation as well.
Absolutely.
Yeah.
And sometimes it's better take a no from a reputable lender and find a lender who would take the client, which they shouldn't be even having not everyone deserve a mortgage, then you costing more emotional stress and potentially losing the property for the client.
Yes, and you brought up a good point there. Just to finish off, is being able to educate that consumer that, this was my first choice. However, that didn't work, but there are other options, but here are the ramifications potentially behind those other options. Ultimately, it's the consumer's choice.
Consumer's choice.
Right? As long as you've laid out all of those options for them, you've done all that you can do to present the best potential options for them. Yeah.
So some of the consumers may want to know how to get lending or how to set up. So if you ever want to learn more about the Neighbourhood Holdings, Reaza don't work directly with the consumers. So you can reach out to me or my team. We are more than happy to chat about more about neighborhood products and services.
Yes, and that is one thing. We are strictly broker focused. We do not take direct. We deal through the broker channel in Canada.
Perfect.
And that's how we originate all of our business.
Perfect.
Yeah.
Thank you for being here, Reaza.
Right. Listen, it's a pleasure. I love meeting up with you and doing business as well.
I appreciate it, brother.
Okay. Thank
Perfect.
you very much.
Thank you.